Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Monday. It means we start hot. We start with Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
Nice to see you as well. So folks that haven't watched your playlist before, if they haven't, what are you thinking? It's hundreds of hours of great content. You were one of your past lives, if you were a home builder. And, home building is a report that came out today. It was a historic plunge. It is something you and I have talked about is coming. Lots of other content creators are coming around, but if people check out your playlist, it's 4 or 5 months ago. We were pointing at numbers like this. I do want to point out that while it was a historic plunge, it is still above 50. And in this particular survey, above 50 good, below 50 bad. It went from 67 to 55. So still at least slightly good. But I want to paint a vision of home builders because I think they're going to act different. And I think they already are acting different this time. But as a builder, I want to kind of talk to you about, hey, what would you be doing in this environment where clearly buyers are getting hurt by affordability? Clearly you have some cancellations. Clearly you may even have some standing inventory, which you probably haven't had for years. And you have future projects, and you have resource problems, and you have supply problems. It's a hard job today. So what would you be looking at as a home builder today?
Yeah, it depends on what level you're at, but in general, you're going to obviously finish what you have in the pipeline. You're not necessarily going to want to jump into a bunch of new starts until you get, some guidance on where things are headed. The biggest risk, for builders out there right now is interest rate risk, because that's affecting their costs, the capital to build for construction interest. If it's a borrower on the back end, a lot of time elapses between when you break ground and when you deliver the house. So you're seeing people that are unable to close on that purchase. They're backing out of contracts. So builders are getting houses back. We're seeing existing home sales. We're seeing a lot of houses come back on the market that've been under contract the last month or so, because the values are changing. Everything's changing with interest rates. So like I said, it really depends. The biggest builders that are public companies, they have the biggest ability to start cutting inventory, cutting their losses and just selling and liquidating. They can drop prices down, and they're building all over the country, so they can kind of wash it out and average it out, because it's not every market. It's certain markets that are taking the biggest hits. And, arguably that's where the biggest builders are, is in those bigger markets. So it really depends. The smaller builders may not have the luxury of being able to just cut prices and sell. So they might have to convert some into rents. They might have to, just break even, do what they have to do. And then obviously the next step is, and it's already happening, builders start to lay off, you cut staff, things like that. So that's a double-edged sword. That's good, because we need more, labor out there. But, where I keep in tune, I work with people all over the country, as and around the world. But the builders that I work with and developers I work with, they're starting to get phone calls again of people looking for work. So, so that's a good sign. That brings more labor back into the workforce, things like that, frees up talent. We're seeing some of the construction costs start to come down with commodities, things like that. So, there's some good and bad to all of this.
No, I frankly think it's all good. So I just want to summarize kind of the dominoes that you so eloquently put together, because I do see it as a series of dominoes, right? If I'm a home builder CEO today, right, and I see out in my workforce, I have 7 properties to sell, where 2 weeks ago I had 5 because we had 2 cancellations, right? And oh, by the way, I have stuff that's almost done, which maybe we don't feel great about, and then I have future projects. Number one is you will blow out your standing inventory. I'm getting notes from people around the country. Oh, look at DR Horton. Look at this. Look at that. They're dropping prices. See, you're wrong. I'm like, no, folks. These are business owners doing the right thing. They are trying to get what they have completed off their books, get as much cash. So as you said, they could kind of pay back their loan, because these construction projects are just money burning machines. So they're going to discount. They're going to buy down costs. They're going to give free upgrades. They're going to do whatever it takes for that inventory.
How are people saying you're wrong? What are they saying you're wrong about when you say builders are dropping prices?
Well, they're basically saying, see, builders are dropping prices, the world is ending, right? They're taking this one business decision and extrapolating it to the world is over.
Oh, I see what you're saying.
I'm like, no.
Yeah, housing market crash, all that kind of stuff.
It's like, see, there, like somebody sent me a note. DR Horton dropped the price 36 grand, and that was supposed to be the sign that the world was over. No. DR Horton is doing great, tremendous cash flow management. It is a wonderful, they need to get that off the table. So yeah, discount it, move on. But then what you will see DR Horton do, what you guys are not seeing, is they're going to slow their ass down. They're not going to keep this money burning machine going at the same rate. That's what the survey today told me, that's historic plunge. They're just going to go slower. They're going to lay people off. They're going to ask their suppliers for discounts. They're not going to do any, truly spec building. They will delay projects. So again, builders are good. If you survived the last Great Recession, you are a very good builder. You are in great shape. You do not overextend yourself like last time. So, and again, to your other point, they have more options today. Some of these builders are going to pivot and just do build for rent. They're like, hey, I can just sell it to one buyer on Wall Street. Let's just go that way. So, this little domino of price cut because they have some standing inventory, which they haven't had in 5 years. To me, it's not the sign that the world is ending. It's actually a sign of a good business owner. What do you think?
Yeah. Well, absolutely. Yeah. I mean, it's the first thing you do when things slow down is you address that situation and you adjust the level of the company to the business that's coming in. So builders are the most nimble in that regard because we've all been through it, 2008 and 9. And construction is, it's cyclical, it's feast or famine. Mm-hmm. So, you're used to it, you understand it, you adjust for it, and you just make the changes you need to make. And, new construction is a small percentage of the housing market as a whole anyways. I mean, there's a record, I think, low amount of new construction in the pipeline. So, there's no starts, there's a lot that needs to be finished. But I mean, you could wipe out the entire new construction market. It wouldn't have put a dent in the housing market right now.
Yeah, roughly speaking, again, these are very rough numbers. When you look at total sales, new home construction is about 10% of the market.
So I mean, you could put all of that into stress with the level of inventories we have right now, where they all become forced sellers and they have to, discount and sell. That's not going to bring down the housing market. Just like the whole forbearance conversation that we had, during the pandemic and all that. There's just not enough units out there to really impact that housing market, and there's more buyers. So. Mm-hmm. They'd be able to liquidate now or just turn them into rentals, because that's a growing segment out there.
Yeah. And the other thing that I really like about what this is really a crazy call, right?
The worst case scenario, what a lot of people think too, like so the big builders, they're finance companies at the end of the day. So they can just finance people, so they could say, well, you can't get a mortgage over here. We're just going to finance you. Yeah, so, I mean, that would be a worst case scenario, but they could do that. So there's a lot of options, on the table for a builder that, has the resources.
Yeah. And again, the vision that, again, I'm always trying to look around the corner. It's hard. It's difficult to do. Again, what is right in front of us is builders removing standing inventory. I want to ask you this question because, again, you've been a builder of, I'll call it luxury waterfront and starter homes. You pivoted on where the market is. Again, when I look at this probably 6 months, actually 9 months out, builders could be doing fundamentally different things. Right? Maybe today they're doing 3,000 square foot homes, but in the future, again, if profitable, they could be doing, 1,800 square foot starter homes, right? 6 months from now, they could fundamentally be building different stuff. That's why they're blowing out inventory today. Maybe they do build for rent. Maybe they do starter homes. Who knows? But it won't take long for these builders to pivot and do something else if the market tells them to, right?
Yeah, so it's market driven. So you're talking about owner occupied production builders. So the market tells you what the need is, what the demand is. So back in, leading up to 0809, it was the McMansion. Everybody was getting the bigger house because it was cheaper. It was interest only. It was no doc. They could qualify for $1 million home when they shouldn't be able to. So that was the trend. Then 2008 and 9 happened, and then it went the other way for owner occupied year round homes. It was getting smaller. People were getting smaller spaces, smaller homes. They didn't want the big expense of taking care of a big house. And they couldn't qualify. Because the mortgage lending market changed. What I was doing was very different. So I was a spec builder. I built strictly on spec. The bulk of my building career, I built a few custom, mostly it was just spec. In other words, I would build the house, then sell it when it was done. I started out in little houses, and then I moved to the big houses because there's bigger dollars. And then when that market shifted, I moved back to little houses, because they were quicker, easier to build and sell, and people could buy them. So that's how I adjusted my business. And then we saw in the pandemic, what happened? Well, stay at home, spaces for study and, homeschooling and home office. And so people went back to wanting bigger houses, leaving the cities and tight quarters and all that, needing more room, wanting yards. So that's what put a lot of pressure on the housing market. Why we're at where we are now is because people were staying put, adding on, doing different things. So it's kind of shifted again where people want slightly larger houses. But now, with interest rates like they are, everything's adjusting and, everything's coming back full circle again. And your best deals out there right now are going to be new, like we've said all along. It's going to be the new builders. It's going to be resort communities. Those take the hit first. Owner occupied that's refinanced in the 2s or low 3s. They don't have to move. They don't have to sell.
No.
And they have a lot of options, unless there's a job change, and then they might just hang on and rent that thing and go rent somewhere else. Why sell and take a loss if you've got that great of a mortgage in place? It doesn't make any sense.
Yeah, there's a lot of people. I think 18% of the folks, again, according to Black Knight, have a interest rate with a 2 on it, which is
amazing. And if
amazing.
you have to move for a job, I mean, that thing is going to cash flow like crazy. You'll probably be able to rent it for whatever, a couple $1,000 a month, $3,000 a month, depending on where it is. That's the other thing that's not coming down anytime soon is rents. I mean, we're seeing a couple of markets where, rents are adjusting, you're getting a little bit of pushback, but the hot in-demand markets, rents are still competitive, and there's bidding wars for rental houses now in a lot of these areas.
That's something I've been telling people is coming. I see, again, I have units and houses. I think units, apartments, multifamily are going to get soft because, again, it's about space and options and all of that. So I think apartments are going to get soft. I frankly think they have to get soft, but the single family home, there's just not enough.
Yeah. And the key there is to study the demographics. There's some economists out there in housing that talk a lot about demographics and the aging population and how that's shifting in terms of how it affects inventory and demand. That's huge in terms of the economy, economic activity, and housing.
Yeah. So as we wrap up episode number 1, kind of how healthy do you think the home builders are? Do you see some epic crash where we're going to lose 50% of them? Because that's really what I think we lost 60% of all home builders in the last crash. A lot of small ones, some big ones. Do you think home builders are the sign that the economic collapse is coming, or they're just good business owners today? What do you think?
Well, I mean, I think you'll see some of them that, won't be able to sustain. So they're going to have to significantly cut back, pare back. It depends on how long this goes, how deep and how high rates go, and how big the housing market corrects. A lot of them will get caught, off guard if housing corrects 30, 40, 50%, that's going to really affect these new units coming out of production. So it really depends on the builder, the area, and what's going on. But yeah, you'll see some that, if this lasts and sustains and goes into a multi-year type of thing, they'll go out of business. You'll see some consolidation, things like that. So it really just depends on how long this lasts, how far it goes, and, how high interest rates go.
Very cool. Well, again, you've been helping people for years. You have so much experience in areas that I do not. Where can people find you and see what you have to offer?
Yeah. So my YouTube channel, everything, you can go to gregdickerson.com. The links for my YouTube channel are all there, or just, Google Greg Dickerson on YouTube. And me and a sportscaster, we're the only 2 Greg Dickersons that come up when you Google the name.
Greg's the better looking one, just so y'all know. Thanks, buddy.